Okay, so that wraps up COVID, and I'm going to pop back on here, and I'm going to ask Dan to join us and take us into the election and the potential tax ramifications of what's coming with this election coming up in 2020. So Dan, you want to take over?
All right, very good. Thank you very much, Rocky. I appreciate that. And it's good to hear that the numbers are still coming down. All right, I'm going to look at things from a different angle here. I'm going to take a look at election 2020 and the policy impact on income and investing. Because at the end of the day, regardless of whether Trump gets in or Biden gets in, we want to have a plan. We want to have a plan from an advanced planning standpoint and an investing standpoint. So when we're looking at the slides coming up here, we're going to go through a lot of data. At the end of the day, we know that you need information. We don't exactly know how the election is going to play out, but what we do know is that once it does and we have a deciding factor and we know who's going to get into the White House or stay in the White House, we will then be able to execute plans accordingly. We're going to get you the information that you need, give you as much information so you can make some logical decisions moving forward, and ultimately so you can have victories in investing and your planning process. We want you to get across the goal line, and we're going to really bring every strategy necessary to allow you to succeed. Let's go forth. We're going to look at the taxes from an individual standpoint and from a corporate standpoint and how they relate to you. And we'll break it down like this. When you think about it, the tax plan proposals, November 3rd is right around the corner here. And the general election is actually less than 30 days away. So we really do need to understand how the ballots are looking and how the proposals are looking for each one of the parties. So one of the main issues here is going to be the Tax Cut and Jobs Act. Is that going to remain under President Trump, or if Biden gets in, is it going to be repealed? And that's on the ballot right now. Many provisions of the Tax Cut and Jobs Act are actually scheduled to sunset in 2025. So it was already on the books to expire. Now, will it expire earlier? And based on the different proposals with the parties, it looks like it might very well. So let's take a look at the candidates' views. The Democrat presidential nominee Biden has taken the position that many of the provisions within the TCJA actually favor the affluent. And because of that, there's a perceived imbalance. Now, if you look at it from the Republican side, President Trump believes that the Tax Cut Job Act really has spurred economic growth. And if you leave it in place as we get through COVID, it's going to do the same thing again, spur economic growth. So we have a good understanding of what Trump is going to do because we've had 3.5 years, almost 4 years of understanding what his economic policies are. So we're going to focus more on Biden's plan because that's the one that is new and people need to really understand to be able to make a good decision. So let's start out with ordinary income. We do know that from the Democrat side that there would be a raise in the top bracket to 39.6% for any kind of taxable income that is greater than $400,000. If you switch over to the Republican side, we all know we're currently at a 37% top bracket, and that's for over $518,000. So a bit of a difference there. Now, let's take a look at the bracket thresholds for both parties, the Republicans and the Democrats here. You can see that some of them stay the same, the 10% and the 35%, but the other brackets are going to increase. Now, what we do not know is what the thresholds will be under the Democratic proposal. There's really nothing out there that tells us that. But we do know the tax brackets are going to go up. Now, when you look at the center column there, this is the tax increase, and this is the percentage of increase over the previous bracket. So if you look at, let's go right down the middle there. On the Republican side, you got a 22% tax bracket. On the Democrat side, you got a 25%. And that is a 13.6% increase over what we're used to right now and have been used to over the last 3 years. And likewise, the rest are modified except for your 10% bracket and the 35% bracket. Those are the two where the percentage of increase is just not there. Now, again, what we don't know is what is the income threshold associated with the Democratic proposal. And that we'll just kind of keep an eye on to see where it goes. But we do believe, based on the proposal, that the tax rates and the taxes will go up accordingly. So let's look at the impact that this has on your individual tax returns. What we've done is we've set up really several proposals here, some pro formas, if you will. And what it shows is taxable income on the right side and different types of taxable income, wages, interest, dividends, capital gains, things like that. Then you've got the current tax law and income associated with it. And then you've got the Biden proposal and income associated with it. As you can see, when it comes to the income, all that stays the same because we're trying to look at this from an income standpoint, apples to apples. Now, where does it change? It starts changing at the effective tax rate. So when you're looking at the current income tax rates and then against the Biden, the effective tax rate for the current is at 10.3%. That's what you would anticipate based on the income that's showing right now. If you look on the Biden side, you would see that the effective rate would be more like 12.4%. And strictly based on the brackets that are shown today, that's about a 20% increase in taxes paid over time. So it will make a difference. And what we're looking at for this one here is people who are making about $65,000 married filing joint. So again, the difference here is about 20% additional taxes under the proposed plan. Let's step forward. Now let's look at an individual who's got, a married couple filing joint again with income of $150,000. Now for this one, the effective tax rate under the current plan is going to be around 13.9%. You look under the Biden proposal and the taxes on that, the effective tax rate ends up at around 18.5%. And as you can see, if you're in this income group, you're getting hit a little bit harder than you did for an individual that has a $65,000 income. And I suppose we would expect that. So in this scenario, we got about a 33% increase in the tax that is paid on the income we earned. Now, in both of these cases, we've got retirees. So I'm sure you probably noticed that there was no salary and wages. So this is someone who is retired. They don't have kids. They're not taking any kind of deductions that are relative to tax credits and things like that. So that doesn't apply here. But let's move on to the next one. The next one is actually a high income earner. We've got, again, two individuals married filing joint. You can see that they've got a high income salary. They've got interest, capital gains. They even actually are getting a pension because perhaps they left one job and were able to start that pension and started a new job. Not uncommon these days, right? In this case, the total income is about $477,000. They're taking about $47,000 in deductions, giving them taxable income of $430,000. So you can see under the current plan, the effective tax rate is at 20.3%. You look under the proposed plan with Biden, and it goes up to 23.6%. So now you can also see that this income range for this specific illustration has about a 15.9% increase in the amount of taxes they had to pay. So it is kind of significant when you're looking at your income. Why do we bring this up? Well, because strategies matter. And if you don't have a strategy to combat this, you're going to end up paying more taxes, regardless of whether it's under the current plan or under Biden's plan. Although under Biden's plan, arguably, it's going to be higher. But you have to have a plan. So let's go a step further and let's take a look at a client who has completed our comprehensive tax mitigation strategy. So they started their strategy 5 years ago, and now they've actually gone all the way through. We're going into an election year. They're wondering, okay, how is this going to look when you're thinking about the current tax laws? And if Biden gets in, how is it going to look after he's in? So let's kind of move forward and take a look at that. So how would this impact the individual's tax returns? Well, all right, in this scenario, we've got income of $215,000. They're retired, married, filing joint. Now, they have no wages because they are retired. So we're really only seeing interest income, dividends, capital gains. You've got your IRA distribution from their minimum distribution. So clearly they're over 70. So they've got their minimum distribution there. They don't have any rental income, and their overall adjusted gross income is $24,000 under the current plan and under Biden's plan. Now, assuming the deductions haven't changed, because we're not really clear on how the deductions are going to work under the Biden plan. So we're making an assumption that the deductions will stay the same at this point. You can see that they're showing no income. And then you might be scratching your head saying, wait a minute, they have $215,000 worth of income. Why are we only showing $24,000? Well, it's all because of the tax planning that was done years in advance. So let's take a look at it. Since $191,000 that they have in income actually came from either a Roth IRA, tax-free, or an overfunded life policy, again, tax-free, they actually don't have to report that income on their tax return. So that income is tax-free. Now, why is it tax-free? Because they paid their taxes many years ago on this money, converted it over to tax-free, and now it's paying off to them. So as you can see, even though this individual has $215,000 worth of income that they're living on, so they're making a nice retirement living, you can see they ultimately aren't paying any taxes this given year. And as long as they follow this strategy, they will not be paying taxes the rest of their life based on Biden's tax plan or the Curtin strategy. And I'm here to tell you, we have clients that are in this category right now. They paid their dues. They've got nothing but tax-free money or possibly tax-favored money. And in this case, they're ultimately, with their deduction, able to eliminate anything that was taxed and end up with a zero effective tax rate and a big zero on the amount that they owed Uncle Sam. So this is phenomenal, but this is tax planning, and it doesn't come without a little work. There's a lot of work that goes along with this from the client side and from our side to make sure that our clients get what they need to get. And that is a proper plan, properly executed, and ultimately bringing in the bacon down the road without any kind of taxes associated with it. So that's kind of gives you an example about how these current tax laws set up properly with tax mitigation could very well end up being a non-game changer for you, because either way you would have paid no taxes. So let's talk a little bit about capital gains. Now, the Democratic proposal would eliminate the favorable 20% tax rate. Now, keep in mind that currently the taxes on capital gain could be 0, 10, 15, or 20%, depending on your income. Now, what would the Democratic proposal do? It would actually bring the capital gains to ordinary income rates. Now, this is where we're not really clear. We've kind of searched for the data, but we can't seem to find it. And that is capital gains rate only for income earners with 39.6% tax rates and higher, and that would really preclude anybody that has income of less than $1 million, or does the ordinary income tax rate apply to every one of the tax brackets? That's something that we're searching for. We're trying to get the answer. Once we do, we will bring that to you. But at this point, we're really not sure how that's going to play out. Now, you compare it to the Republican program, they're looking at maintaining the tax proposal as it is. And what does that look like? Again, the current tax law is 20% or up to 20%, depending on your income. And then if you're over $441,500 in income, you would also get hit with a Medicare surtax. So a total of 23.8% is where we stand today. How does that look? Well, again, these are the proposed plans. The capital gains on the Democrat side, we're not really sure how it's going to apply to any income under $1 million, but we do know over that, you're looking at 39.6 plus the Medicare surtax. If you look over to the current and proposed plan, you can see a marked difference in the way the capital gains are going to be taxed. And for anybody who has a lot of non-qualified money in the markets, this is a game changer for you. So it's important when it comes to whether this thing goes through or not, how we're going to respond to it. Now, let's also talk about stepped up basis, because that goes into the same kind of arena here. What do I mean by that? Well, let's assume I have $1 million in a brokerage account, non-qualified money, and I've seen it go up $200,000. So now I got $1.2 million in that account. Well, if I died today, my kids are going to get the stepped up basis, so they're not going to pay any tax because the basis is going to go up to that $1.2 million. If we look at the Democrats' proposal, they would eliminate the stepped up basis. So my kids would then have to pay tax on that $200,000. And again, we're not clear on how that capital gains is going to work, but we do know that based on the proposal, there is going to be a tax on that. Whereas today, with the Republicans' proposal and the way it's currently structured, that wouldn't change. We would still get the stepped up basis. This is a big deal for many people who have non-qualified accounts, properties, houses. I mean, there's a lot that goes into this that could take away from an estate from a tax standpoint. Now, let's look at estate taxes. So the estate taxes, everybody knows the exemption skyrocketed here for each individual. So most people weren't really worried about estate taxes. But what Biden's proposal is going to do is bring it back down to the TCJA levels. Now, no one's really clear on what that's going to look like. There's been talk anywhere between $1 million and $5.3 million. So we'd have to kind of wait and see how that plays out. But at the end of the day, it's going to make a difference in many people's overall circle of wealth when it comes to transitioning the estate. Then you look at the gift tax. The gift tax is also going to be lowered, and then the transfer tax would move from 40% up to 45% with the Biden new proposal plan. So an additional 5% would be lost on the estate. So additional planning is going to be critical should the Biden plan actually come to fruition. And we'll take a look at some of that.